Good
morning, members. We've got a quorum, and it is the appointed time for the meeting. I call to order the meeting of the panel on financial affairs. Item 1 on the agenda, confirmation of minutes of meeting and matters arising. The minutes of the meeting held on the 3rd of December 2012 have been issued to members through LC paper CB bracket 1585/12 to 13. The clerk has not received any proposals for amendments. If members have no views to express now, can we please confirm the minutes? There is no objection. Minutes are confirmed. Second, information papers issued since the last meeting. Members, please note, since the last regular meeting on the 4th of February 2013, the panel received 3 information papers, and the details are in the agenda. Item 3, date of the next meeting and items for discussion. The next meeting will be held on the 5th of April 2013 on Friday at 10:45 in the morning. The administration has proposed 3 discussion items. 1, relocation of the printing workshop of Government Logistics Department. 2, extension of a supernumerary AO staff grade C post for the establishment of an independent insurance authority and a policy holders protection fund. And 3, review of statutory fees and charges of the official receiver's office. I'd like to ask members whether you have any views or comments. Mr. Chen Kin-po, Vice Chairman. Chairman, the 5th of April would also be the date for a LegCo delegation returning from South Korea. I don't know how many people are going. I wonder if the meeting date can be changed. The clerk, well, actually, that is a scheduled regular meeting date for this panel. I think we moved the date of the regular meeting already because of the Easter break. The clerk. Mr. Chan, I think that delegation is under the Environmental Affairs panel. People are still signing in. We do not know how many members will be going. As the chairman said, we have already moved the meeting date because of the Easter break. And as you can see, the meeting is going to be on a Friday, and the administration has been notified of this date. If we need to change the date again, we will have to see whether we can find other possible slots. Well, yes, it depends how many people are going. Well, there is a high possibility of me joining that delegation, and I don't want to miss any meetings. Please try to see if you can move the meeting date. We'll try to see what we can do. We'll try our best, but if we cannot move the date, please do understand, because we are already accommodating the Easter break. Okay, if there are no other views, we'll take up those 3 discussion items at the next meeting. And then we come to the discussion items. Legislative proposal on the regulation of over-the-counter derivatives market. Can we ask the administration team to come in? Since this is a legislative proposal, other members have been invited to join. The administration has provided a paper before the meeting, and that's in LC paper CB bracket 1599/12 to 13 bracket 03. The administration would also be preparing some information for a briefing at the meeting.
When
the administration is ready, please ask a representative to present the paper. Thank you, Chairman. On the legislative proposal for regulating over-the-counter derivatives market, I think we came here before to the panel to give member briefings and also explanations. The legislative proposal work has entered into a rather mature stage. We'd like, therefore, to take the opportunity to introduce to members our more specific legislative proposals and our thinking. Can I please first ask the Hong Kong MA and SFC colleagues to make use of a PowerPoint to explain matters to members. Can I ask Mr. Darrell Ho of the Hong Kong MA to do the presentation? Certainly. Chairman and members, good morning. I'd like to now take you through the background. After the financial tsunami in 2008, the international regulators saw that financial institutions could make use of the OTC market, and they are highly interlinked. And the risk could be that if individual financial bodies are in a problem, other bodies will be involved. Is it that there is a problem with the PowerPoint? Thank you. Therefore, after the financial tsunami, the G20 group set to study into ways and means to see how the market can be better regulated. The G20 commitment includes a series of proposals. One, that OTC derivative transactions are to be reported to trade repositories in order to enhance market transparency. Two, standardized OTC derivative transactions are to be centrally cleared through central counterparts. That is to reduce the risk. And number three, non-standardized OTC derivative transactions would have to submit themselves to higher capital and margin requirements. And also there is a trading requirement. Standardized OTC derivative transactions are to be traded on exchanges or electronic trading platforms where appropriate. You can see that the objective of these requirements are just twofold. First of all, to improve overall market transparency, and two, to reduce counterparty risk. Number three, to enable regulators to better assess, mitigate, and manage systemic risk in the OTC derivative marketplace. We'd like to pay attention to one point, that this market is inherently global, meaning that the Hong Kong market is not entirely enclosed just for Hong Kong market participants. Neither is the US market. There could be cross-border transactions. Therefore, when we design the regulation mechanism of OTC derivative market, we have to, of course, consider how we can dovetail with other regulators in terms of the standards of regulation. We also have to avail ourselves to the characteristics of the Hong Kong OTC derivative market, and when we design the system, we have to reflect such characteristics. And you will see that these factors have been taken on board when I introduce to you the details of the mechanism. Page 7, the progress landmarks. October 2011, we issued a joint public consultation paper in order to consult the public on the framework of regulation. In June 2012, we came to LegCo to submit a piece of subsidiary legislation to enable voluntary clearing of OTC derivative transactions in Hong Kong. This has enabled us to deal with some legal issues so that some market participants, before the setting up of the new mechanism, if they'd like to voluntarily participate in centrally cleared transactions, they have this legal framework to do so. In July 2012, we issued the response to the consultation paper, and at the same time we also issued a supplemental paper for public consultation on proposed licensing scheme for new expanded regulator activities and the oversight of systemically important participants, or SIPs. In a moment, the SFC will be giving you the details. Page 8. This is broadly what the proposed regulatory framework is. On the right, you see this chart. Uppermost, you see the different market participants in Hong Kong, authorized institutions, meaning banks, approved money brokers, and also licensed corporations and other prescribed persons. The Hong Kong MA and the SFC are proposing that the new regulatory framework be subsumed under the SFO, sorry. And then there are two levels to this framework. First of all, in the primary legislation, we will introduce some mandatory requirements, including clearing, reporting, and trading requirements. And we'll specify penalties and confer powers on the regulators to make rules. The rules will become part of the subsidiary legislation. Specific rules and also the types of trading activities will be regulated under the subsidiary legislation. The Hong Kong MA and SFC will be having a division of labor, but we will together decide on the details of the regulatory framework. For example, when the primary legislation is made, we will have to have the consent of both SFC and Hong Kong MA before the rules are made, in order to make sure that the rules are akin to market reality. In the middle, you see a green box. This is the description of the framework. Now, in terms of the regulators, those are the Hong Kong MA and FC. AIs, AMBs will continue to be regulated by the Hong Kong MA, while LCs and prescribed persons will be regulated by the SFC. The next two slides will let you know the key features of the Hong Kong regime. First, I mentioned the mandatory requirements, and our thinking is that at the initial stage we will only introduce two of them, that is clearing and reporting requirements. As for the trading requirement, I said that that should be done on the electronic platform, etc. When will that be introduced? We hope that after some time the new mechanism is up and running. We will look at the market situation, and then we will give consideration as to how best also to impose the trading requirements in Hong Kong. As for the products covered, since this has to do with the Hong Kong market, there is this characteristic, and that is most of our OTC derivatives products are about interest rate swaps and non-deliverable forwards. Therefore, at the initial stage, we would only include these two products. And then we will look at the market development and also include other types of products. At the same time, we'll also be watching over intermediaries, including consultants of the trading partners and also clearing partners. And we'll also introduce a new type 11RA and new type 12RA activity regulation, and my colleague will give you the details later. Page 10, the SIPs. We had already mentioned that apart from banks, AMBs and LCs, there may be some other prescribed persons who are systemically important, meaning that the positions held may reach a certain threshold and they may pose a threat on the market stability overall. That is why, under the legislative framework, we will give some powers to the Hong Kong MA and SFC to also have regulatory oversight of these players. And if necessary, we may be able to ask them to reduce the positions that they hold.
Finally, about capital and margin requirements for banks. Well, all along, OTC derivatives transactions have been the core part of the bank's business. They've all along been monitored by the HKMA, and in terms of the high capital requirements, it has been introduced as part of Basel III implementation. So for banks, they will be subject to higher capital requirements. As for international standards, now deliberations are still ongoing for capital and margin requirements, so we will closely monitor international developments, and once international standards are set up, we will consider how these relevant requirements can be introduced in Hong Kong. Page 11 Briefly, we consulted and sought views from the sector, and they're generally supportive of the proposed regulatory regime. They're also supportive of the proposed division of responsibilities between HKMA and SFC, and they also support us for not imposing the mandatory trading requirement at the outset. As for the consultation or the supplemental consultation in July last year, basically we consulted the views on the proposed licensing regime for new or expanded regulated activities and the transitional arrangements. That is to say, the market is now already in existence before we introduce regulation. So we need to consider how transitional arrangements could be made. As for the following two slides, I'm going to talk about the proposed mandatory reporting obligations. And there are two requirements. As for mandatory reporting requirement, for reportable transactions, they must be reported to the trade repository being set up by the HKMA as required by the law, and the channel to do so is either directly to the HKMA trade repository or indirectly through an agent, for example, a foreign trade repository, because some market participants might be international banks, and at the same time they are subject to reporting requirements elsewhere. And it's possible that they have made such reports to a foreign trade repository, and they can then entrust the foreign TR to make such report. So indirectly, they can make such report to fulfill our requirement. As for the mandatory reporting obligation, how will it be introduced? For different personnel, there will be different arrangements. As for LCs, AMBs, and locally incorporated AIs, that's locally incorporated banks, they will need to report if the following circumstances arise, and that is if they're a counterparty to a reportable transaction, or if they have originated or executed a reportable transaction and the transaction has a Hong Kong nexus. If the participant is an overseas incorporated AI with a branch in Hong Kong, the circumstances for reporting are that if the AI acting through its Hong Kong branch has become a counterparty to a reportable transaction, then reporting is necessary. Or if it acts through its Hong Kong branch and has originated or executed a reportable transaction, and the transaction has a Hong Kong nexus. For other persons, if they positions exceed the reporting threshold, in other words, the positions are so large that they are required to report the reportable transactions. And at the same time, to minimize the reporting burden, we also have this design in our system that if an LC, AI, or AMB has already reported such transactions, these persons will be exempted from their reporting obligations. That is to minimize the reporting burden of such other persons. Now, in the previous slide, I talked about Hong Kong nexus, and that is a reporting obligation will arise if the transaction has a Hong Kong nexus. So one key element is a Hong Kong nexus. And what does that mean? Now, in relation to OTC derivatives, there are two categories. Well, in the case of equity derivatives and credit derivatives, if the reference entity is listed in Hong Kong, or part of the reference entity is listed in Hong Kong, or if it's wholly owned by the government of Hong Kong SAR, we call this having a Hong Kong nexus, and this is in relation to equity derivatives and credit derivatives. The other category, which will be defined as having a Hong Kong nexus, is other derivatives that has the underlying asset currency or rate denominated in or related to Hong Kong dollars or renminbi. So, in short, this is what is meant by Hong Kong nexus. I will defer to my SFC colleagues to take you through the remaining part. Members, now I will go on to brief members on the other proposed mandatory clearing obligation. Apart from reporting requirement, we also propose a clearing obligation. Well, but at the initial stage of the implementation, we would like to include two products, and that is interest rate swaps and non-deliverable forwards. And in relation to these two products, we will look at whether these transactions can be regularized or standardized, so that these will become eligible or clearing eligible transaction and will have to be cleared. So in other words, for AIs, AMBs or LCs, if they're counterparty to such a standardized transaction, they will be required to clear such transaction through a designated central counterparty. However, we also understand that these persons might not have frequent activities in this area. They might only have one or two transactions, and this might increase their costs. So we propose to introduce a clearing threshold, and that is to say, only if the threshold is exceeded will we require them to observe the mandatory clearing obligation. And that is to say, if both parties exceed the threshold, the clearing threshold, they will be required to clear the transaction through a designated central counterparty. And there are two kinds of designated CCPs, that is recognized clearing houses, RCH, or authorized automated trading services, ATS, providers under the law. And for overseas parties, they can get a license from us, and that will be an authorized automated trading services provider license. And in our design, we also note that for some overseas regulators in US and Europe, they do provide some sort of exemptions. That is, market participants will be exempted from observing the mandatory clearing obligation. So we will also look at the overseas development, and when time is right, we will introduce exemption mechanisms as well. Now, and there are two ways you can fulfill the mandatory clearing requirement. One is by becoming a member of a designated CCP, and that is the direct channel. And for the indirect channel, and the transaction can be cleared through a clearing agent and ultimately via a member of a designated CCP. So both channels are viable. And we also propose regulations of intermediaries. And as mentioned by Mr. Ho just now, some banks are now participating in the OTC derivatives market, and they are already subject to the supervision of HKMA. But under the SFO, the SFC has only limited supervision over such activities in the OTC market, derivatives market. So we propose to introduce regulation concerning two types of activities. One is Type 11 regulated activities, which will encompass dealing in and advising on OTC derivative transactions. And our design is that the coverage will be similar to the one covering regulated activities under the SFO. For securities and futures regulated activities, they are required to obtain license from us under two circumstances. One is dealing, the other is advising. So when we design the Type 11 RA, we will draw reference from the existing coverage under SFO in relation to these two activities that are being regulated as a starting point. And we also consider AI and AMBs and the fact that they are currently being regulated by the HKMA and they will be excluded. the Type 11 RA may have a coverage that may overlap with existing RAs under the SFO, and in such circumstances, they'll be exempted from the requirement of obtaining a license. The final point I'd like to make is that in relation to the law governing securities and futures transaction, exemption will be given for proprietary trading for with a professional investor. However, we don't recommend granting such exemption under Type 11, because if exemption is given for trading with a professional investor, since they are the ones that are mostly involved in OTC derivatives market, it will mean that no regulation can be carried out. So we don't propose this exemption. As for the new Type 12 RA, they involve the clearing agent, because we feel that we also need to regulate clearing agency services. So for those providing clearing agency services in the future, they're required to be Type 12A RA license holders, because in the process they will receive assets and bilaterals from their clients, and if they're not subject to the supervision, there may not be adequate protection for a client. So they should be subject to the Type 12 RA licensing requirement. As for AIs, AMBs, they are overseen and regulated by the HKMA, and we propose to exempt them from this requirement. And there are also two types of regulated activities under the SFO, and we propose to expand the regulation to cover OTC derivatives transaction. One is intermediaries who wish to provide ATS, and at the moment it only covers securities in future. But in the future, we are going to expand the regulation to cover OTC derivatives, such that they will also be required to be licensed. Now, for Type 7, apart from Type 7 RA, we also propose to expand the coverage of Type 9 RA to cover not only futures and securities in future, but also management of portfolios of OTC derivative transactions. So if OTC derivative transactions are involved, we also propose that they be regulated under the expanded Type 9 RA. So these are the proposed regulated activities. Now, as for Type 11 and Type 12 RA licenses, at the moment, there are market participants carrying out these activities. So despite this new requirement, we also need to consider how we can minimize the nuisance or interference to market activities at the moment. So we propose a 6-month transitional period. And during the 6-month transitional period, even if the relevant persons have not obtained licenses from the SFC, they can still carry out or carry on with the regulated activities under Type 11 and Type 12. And that is to say, if these activities are already ongoing, and if they wish to carry on with the activities, they should submit their application to the SFC within the first 3 months. And after they file their application, we will look at whether they meet the certain requirements.
If they do, then after the completion of the 6-month grace period, they can continue to deal in RA Type 11 and 12 activities until the SFC will do a complete vetting of the activities. In other words, if market participants would like to continue with the activities, they can make a submission within the first 3 months. And then when the SFC has completed the vetting and supervisory vetting, before that they can continue to carry on with the activities, and that would minimize any disturbance to the market. As I said, we also like to introduce a system in order to oversee systemically important participants. Some market participants, for example, a market user, they do not need an SFC license for Type 11, 12, and RA. If they have a large position, it may affect the stability of the financial market. And so we need to see how we can protect and preserve the stability of the Hong Kong market. What we propose to do is that we will set a threshold. If market users hold a position which exceeds the threshold, in other words, they have a huge OTC derivative position, then we will require them to proactively declare that to the SFC that they have exceeded the designated threshold. After that is done, the SFC gets to know that there are these people in the market. And secondly, we propose that under the law, we be given the powers to manage the risks of these people. First of all, if necessary, we can require these people to provide information about their OTC derivative activities, including the background. And in extreme situations, we will have the power, hopefully, to take action in respect of their OTC derivative positions, in other words, to reduce the position in order to reduce the risk. And in some situations, we can even ask them to increase the collateral. Sorry, please be quick. We actually expect that when we impose the requirement, there should not be many of these people making their appearances, but we'd like to prepare for rainy days, and we like to have a measure to take care of future risks. As for the infrastructure, we mentioned that the Hong Kong MA is now setting up a trade repository, and as you know, the Hong Kong Exchange is also building a new Hong Kong Exchange in order to provide OTC derivative trading. It is expected that by second quarter, the new Exchange and Clearing Limited will start operating. The SFC is now vetting the new clearing house to see whether the risk management arrangement is appropriate. The way forward, what are we going to do next? Right now, we'd like to introduce the bill to LegCo in the second quarter of this year. We hope that in the summer, the subsidiary legislation will also be put out to the market for consultation. When we have all the laws in place, we hope that we can immediately implement the regulatory framework on OTC derivative market. That is all for the introduction. Thank you. Two members have intended their intention to ask questions for the moment. Mr. Kenneth Leung, 3 minutes each. First of all, I'd like to ask about the coverage of derivatives. In Para 10 of the paper, you say that the
可唔可以解釋下 non-deliverable forward 係咪即係啲 cash settle 嘅contract for differences 就唔係physical settle？
Can you explain whether you're not talking about physical settlement? Who will take the question? Thank you, Mr. Leung, for the question. Can you hear me? Am I getting through? Yes. The simple answer is Mr. Leung's understanding is correct. That these NDF or non-deliverable forwards are settled in cash. The background is that if you talk about Asian currency, NDFs, including renminbi NDF, they are not very liquid. And also there may be some currency control. And in the end, they may be settled in US dollars. Right. Thank you. Secondly, my understanding of this requirement is that the reporting and clearing requirements would apply to people with a Hong Kong nexus. My question is, if it is a B2B bipartite swap agreement, it is an interest rate swap, would that come under the new law? If that's the case, then a company's normal operation will be gravely affected. Sometimes the companies are not statutory bodies. They're just a commercial concern. And it may have an interest rate swap with another company. Would that kind of transactions be supervised under the new framework? Who will take the question? Thank you, Mr. Leung, for that question. According to what we understand, whether it be in Hong Kong or overseas, non-financial commercial concerns usually make use of banks and financial institutions to do settlement. But of course, there may be OTC derivative trading amongst commercial concerns like interest rate swaps, but then that is very rare. As our colleague explained, that we would also like to take care of a situation where the reporting requirement might also apply to non-financial institutions. So if it is a B2B transaction, unless it reaches a very high threshold, they will not have this reporting requirement applying to them. And if the counterparty is a bank, there is no need for reporting. Mr. Albert Ho, Chairman. The legislative proposal is to regulate OTC derivative trading. My understanding is that this is opposed to retail products that are accessible to the public. Is that right? And relatively, they may not be of a large amount. We would think that the purpose, well, one of the purposes is to protect investors. But I have read your entire paper and I understand your thinking. It seems you are doing this from the perspective of preserving the stability of the financial system. That may at least be the primary objective. I don't know how well you can protect small investors. You're only asking for reporting and clearing to be reported. But what about the risk of products? You have also the responsibility to check the risk of products. And secondly, you only look at the transactions and how you can regulate the institutions. There are a few types of them. And also there are the professional investors involved in private banking. There are many problems with the transactions, but I won't go into those. But there is a third point. The regulation is only limited to 2 products. But actually, during the financial tsunami, many people lost money because of the mini bonds and also accumulators and ELNs. Those are not proposed to be regulated. Is it that you are not exactly concerned with protecting the consumers? You're only concerned about systemic security? Right. How can you improve investor protection under this legislative proposal? Ms. Yen? Chairman, as it is called, these are OTC transactions. In other words, they're not done within an exchange. And now the problems that arise from these are not regulated. Even now, these products are not regulated at all. This is because now we see the risks. And it is not just the risk to the financial system, because if the financial system is affected in any way, individual investors will also be subject to damages. As you know, the financial system is made up of investors. The overseas or international observation is that investment products are done over the counter, and now there is a concern because of the large volume of transactions. And very often, only institutional investors are involved in these transactions, and that is why the market is unregulated. It is not transparent. This is actually precisely to enhance market transparency and also to bring these products into the regulatory framework. That is why we are mandating reporting and clearing, and also to mandate the provision of information, so that even if there are OTC activities, they will not be able to impact upon the financial system in an adverse way. And also the licensing of intermediaries. As you have heard, the requirements are such that even if the intermediary's integrity is also involved. Well, okay, I understand systemic security, banks should not collapse, etc. I understand those. But what about small investors who may make uninformed investment decisions, suffering unfair risks? Is that something outside your present thinking? Well, when you really make laws, I'm sure the Bills Committee will also ask similar questions. Would you like to have further answers now, or would you like to take this back for further consideration? SFC? Let me respond to the question by Mr. Ho. Internationally, we are trying to regulate OTC derivatives. This is for financial stability. But actually, under the SFO now, some products, especially retail products, and if they are sold on a large scale, they have to be vetted for approval by the SFC. That's the first point. Secondly, the international focus now is on futures and foreign exchange. But when it comes to equities, which of course most Hong Kong people buy and sell, that will be for the next step internationally to see whether there are ways to deal with them. Because if products have to be centrally cleared, they must be homogeneous and standardized. But now, banks issue different retail products and they are tailor-made and they are quite diversified. Internationally speaking, people are thinking of how this can be dealt with. But whether it be for the OTC framework, which targets the wholesale market, in the retail market, we still have suitability and conduct requirements. If you are dealing in securities, under the bill, the definition will be changed to include OTC equities. Therefore, to a certain extent, even retail activities are to be affected positively, and there will be more protection, and we will keep watch of international developments in order to increase regulation. Next, Sin Chung Kai. Well, in your PowerPoint, you state quite clearly that you have to implement the G20 commitments. What you are going to do is that on page 9 of your PowerPoint, you're going to deal with two products. I don't know whether there is a G20 consensus as to what products are to be included. Have you taken on board all those products committed by G20? Maybe you do not want to regulate certain products because they are not available in Hong Kong. So can you give us a list? And also, these two products that you have chosen, they will be subject to a kind of transaction threshold. Is that right? Can you let us know more? Thank you, Mr. Sin, for the question. First of all, the international requirement. Principally speaking, or in principle, the mandatory clearing requirement is such that in the long term, every jurisdiction with regard to standardized OTC derivatives, they must be included. And the mandatory reporting requirement is that whether it be standardized or non-standardized OTC derivatives transaction, they should be reported. So there is a wide coverage. But we, of course, recognize that there must be a process for this to be done, and it is recognized that there are characteristics in different places.
For example, in US or Europe, the credit default swaps in relation to credit derivatives, they are more of a concern for them. If you're aware of the Lehman Brothers incident, it went bust because mostly of these kind of transactions. That's what Asian countries, they have more to do with interest rate derivatives. So there is no requirement on which to go first. It depends on the risks faced by that place. So like many other Asian countries, in particular in Hong Kong, our judgment is that the NDF and the interest rate swaps face higher risks, and they are more frequently transacted in the market. So we will impose requirement on these products first. But the next step we will take may be on regulating equity and credit derivatives. Now, we did an ad hoc survey 2 years ago, and we saw that for interest rate swaps and NDF in the market, they accounted for 17 or 18%. Now, you may ask, well, they don't account for a large proportion. What do you mean by the percentage in the market? I mean, in terms of the total OTC derivatives market activities, interest rate swaps and NDF accounts for 17 and 18% respectively. Now, for foreign exchange swaps, internationally, as a consensus has yet to be reached for mandatory reporting and clearing, because these transactions are of short terms. They may complete the transaction within, say, a week's time or several days' time. So we will gradually consider to implement such regulations. I'd like to ask about page 14, Madam Chair, the mandatory reporting obligation and the definition of Hong Kong nexus. And this is quite complex, in fact, but I'd like to ask a simpler question first. Now, 1A and B says that there is a specified percentage. So I'd like to know something about this specified percentage. Are we talking about the number of entities or the trading volume or the number of assets or number of entity that is listed in Hong Kong? What exactly is this specified percentage? Do you mean the identity number or the code of the entity? Because this doesn't look scientific. Say 3 out of 5 entities, well, they may not have significant impact on the market at all. Or are you talking about something to do with the value? I'd like to ask this question first. Yes, who'd like to respond? Mr. Ho. Thank you, Chair. Now, Mr. James To actually made a very correct hypothesis, and that is there is notional value for these OTC derivatives. For example, for contracts involving equity or credit derivatives, if the reference entity, if there is more than one reference entity, then in the contract it will state the respective notional values. Now, when we calculate the appropriate percentage, we based our calculation on notional value, not on head count. Mr. To? Chair, so when we talk about nominal value or notional value, that is the nominal value set down by the maker of the product. So even if the reference entity is large, it is based solely on the specified value. Right, for example, if we're talking about a credit derivative, if a company or an entity cannot pay its debt, then the counterparty will be required to pay the debt. The derivative may encompass 10 entities, and 9 entities may, for example, be Hong Kong based, but the 10th entity may not be listed in Hong Kong, and the entity might be of such a huge proportion that it totally outweighs the remaining 9 entities. Then it will not be covered. So it depends on the percentage of the value. Any follow-up? Well, will there be any circumstances where an entity is not listed in Hong Kong but listed elsewhere, but the entity holds a lot of subsidiary companies in Hong Kong, or they hold a huge amount of assets of unlisted companies in Hong Kong? Now, for example, for Landmark, well, they have a lot of land in Hong Kong, but they listed in Singapore. So in that case, will they affect Hong Kong's market. Now, to my understanding, this is not covered. The purpose of monitoring the derivatives or regulating the derivatives activities is that they may affect our financial market. So if the equity is, or if the entity is not listed in Hong Kong, if it's not listed in on a Hong Kong stock market, this is not really our primary concern. So the number one concern is whether, well, what about the subsidiary companies? Say if the head company or the parent company is listed elsewhere, but and then it holds a large proportion of reference entities in Hong Kong. What about that? Yes, would like to respond. Now, just to respond briefly, for OTC derivatives market as and the commitment is a trend for other countries to regulate the as well. Now, the entity might be listed in other jurisdictions as well, and they may be subject to regulation in other jurisdictions, and we will liaise with these jurisdictions. All right, one final question. Now, the direction of regulation is in line with international development. I can understand that, but without a register, do you have any idea of how widely circulated are these derivatives? They do not only involve institutional investors or professional investors. Do they also involve individual investors? Do you have any such information? Chair, it's exactly because we have yet to set up this system, and currently there is no mandatory reporting obligation. We cannot require banks or financial institutions to regularly report their transactions to us. Having said that, 3 years ago, we did an ad hoc survey covering not only banks but also larger securities firms and investment banks. Of course, the figures only reflect the situation 3 years ago. Now, about the scale of the OTC market in Hong Kong, it covers about 1.6 or 1.5 billion US dollars. For interest rate swap, 17%, NDF 18%, credit swap 2%, and other foreign exchange derivatives 58%, the largest percentage. As for equity derivatives, 5%, so altogether about 100%. As for participants, the distribution, according to our information, are mostly banks, which accounted for 70%. As for other parties, they accounted for, and other end users, they accounted for 20 to 30%. So this is in line with the overall market situation, and that the predominant participants are banks and larger institutional investors, whereas individual investors only accounted for a smaller proportion. So for this proposed mandatory reporting and clearing requirements, what is the percentage of what is the percentage in relation to the 1.6 US trillion dollars? We're talking about the interest IRF and NDF. These will be the two products covered at this stage, and it accounts for roughly 35%. And we will continue to expand the coverage at the next stage. Apart from Mr. James Toh, does any other member wish to ask questions? If not, I'll draw a line here. Mr. James Toh, 3 minutes. 3 minutes only. All right. I'd like to ask about page 14, number 2, about the related assets, underlying assets, currency or rate in Hong Kong dollars or renminbi. Now, say if it's pegged to the US dollars, and say if something happens and it has to be delivered, and that the other party requires a transaction or to be cleared in Hong Kong dollars or renminbi, is it regarded as a related transaction or related derivative? Who would like to take this question, Mr. Ho? Now, basically, it's targeting the related asset under the underlying asset, not the currency for settlement or clearing. Because when the contract is to be settled, ultimately, a currency will be used for the settlement. Under some agreement, the payment may be made in Hong Kong dollars, but if the underlying asset is not related to Hong Kong dollars, they will not be caught by our system. Well, then please rethink, because using the spirit, and that is to, well, you say that you have to reflect the spirit of the commitment. Say if it's US dollar denominated, but then in fact it's just a form of packaging, and the settlement will have to be made in Hong Kong dollars or renminbi, and the volume is very large, then you have to pay attention to that. So please rethink about it. Now, another question. Say after this piece of legislation come into effect, let's say if we place bets on the Hang Seng Index, for example, will there be any triggering amount, or can that be done in any amount as far as the reporting requirement is concerned? Can you speak into the microphone, please? Now let's see if yes, please speak into the microphone. Well, if we're talking about billions of dollars, a very large amount of money, well, say if two rich guys just do something out of the blue, well, if two Hong Kong people do such a thing that's related to the Hang Seng Index, and it's reportable. Now, Mr. To asked a very clear question. Is there any triggering amount? Because because it will be stupid to be caught by the law, criminally speaking. If we're talking about tens of billions of US dollars, if this is if the amount involved, then it's reportable. That means it will be written into the law. Yes. Yes, it will be stipulated in the subsidiary legislation. All right, I think all these questions asked by members will be followed up in the Bills Committee. According to the administration's paper, it is proposed that the bill be introduced into the Legislative Council in the second quarter of 2013. So, members, do you agree to the submission of the legislative proposal by the administration? If there is no objection, then please continue with the consultation. Let us move on to the next item, relevant income level for the purpose of mandatory contribution under the MPF Schemes Ordinance. I'd like to take leave because I have to leave at 12, but because of for the sake of continuity of the discussion of this item, I will let Mr. Chen Kin-po chair this part of the meeting. Now, because this item involves a legislative proposal, all members have been invited to take part in the discussion, and the paper has been submitted by the administration, and a PowerPoint briefing will be given by the administration. The paper has been tabled. I'll invite the representatives to take part in the meeting now.
二個都咳得離晒譜嘅真係。嚇？你係咪方便佢？我幫你執。得㗎啦，揾呢個。依家個 PowerPoint 應該。
We'd like to welcome Ms. Emmy Wong, Mr. Darren McShane, and also Ms. Gabriella Yee. If you are ready, please start the presentation.
Mr.
McShane will be preparing to do the presentation, so let me do a very short briefing. This is because there will be a new SMW coming into effect in May this year. The MPFA has conducted an interim review of the minimum level of relevant income, or MIN-RI, and the maximum level, or MAX-RI. Today we are here to let you know the review findings and also the related legislative amendments. We'd also like to seek members' views on the MPFA legislative proposal before we decide on the actual proposal to be made. So I'd like to hand over to Mr. McShane now. Mr. McShane, please.
Thank you, Chairman. Chairman, I'll take members briefly through the contents of the paper. The background, as members would be aware, is that the Mandatory Provident Fund Scheme Ordinance provides the contribution scales for employers and employees. Each contribute 5% of relevant income. Closer to the microphone, certainly. And self-employed persons contribute 5% relevant income, subject to some caps at minimum relevant income and maximum relevant income. As members would be aware, the consequence is that minimum relevant income is subject to a cap in the sense that below $6,500 per month, certain rules apply, and for maxima, at the moment, the rules are in relation to contributions over $25,000 per month. Chairman, the legislation does provide for a mechanism for review of those figures on a 4-yearly cycle. That's set out in the ordinance, and the ordinance does prescribe some adjustment factors that the authority must have regard to. In the minimum relevant income, the statutory factor is we must have regard to 50% of monthly median employment earnings, and for the review of the maximum level of relevant income, the statutory factor is we must have regard to monthly employment earnings at the 90th percentile. The legislation does not, however, limit the consideration to those factors. As members will be aware, this is not the first review. There was a review in 2006 and there was a review in 2010. The 2010 review, the background set out in more detail in the paper, but essentially, having regard to the statutory factors at that time, the data suggested that the minima could be adjusted to $5,250, although subsequent data suggested that that could be increased to $5,500. When that matter was discussed at the panel and in LegCo subsequently, this was affected by the fact that the statutory minimum wage proposals were being implemented at that time, and there was some discussion by members that the adjustment mechanism had become outdated because it did not have regard to the statutory minimum wage. Consequently, the proposals in relation to the minimum levels of relevant income were adjusted having regard to what was happening for statutory minimum wage. And of course, as members will recall, at that time, in the initial implementation of that proposal, the hourly rate of statutory minimum wage was $28, and that was multiplied for these purposes by the median working hours at that time of 8.5 hours, and on the basis of a 26-day working month. Doing the maths on that came to a figure much higher than the $5,500, which the statutory formula suggested. The maths on that came to about $6,188. In discussion, having regard to the views that were expressed at the time and in obtaining a consensus on this issue, the administration was comfortable with proposing an adjustment up to $6,500, which was ultimately processed as a legislative proposal, and that became effective on the 1st of November 2011. So that was the most recent adjustment to the minima. The maxima RI adjustment in 2010, the statutory factor, that is the 90th percentile of earnings, suggested an adjustment to $30,000, and this didn't change in the subsequent review that year. There was general support of the inevitability of an increase to $30,000, but there were comments through the legislative process about the difficulty for employers in doing this as a one-off increase, which was a substantial increase from the pre-existing figure of the $20,000. So having regard to the burden on employers, the MPFA proposal at that time was that the adjustment to $30,000 should be done in two phases. That is, a first level adjustment to $25,000 and a phase two adjustment to $30,000. What happened on that review is that the maximum relevant income was increased to $25,000, and that was effective from the 1st of June last year, 2012. So that's where we have gotten to. During the process last time, there had been some suggestions, as I said, that the statutory factors needed to be reviewed themselves, not just the figures, but the mechanism itself needed to be reviewed, having regard to the implementation of the statutory minimum wage changes. And at that time, we did agree to review the mechanism, but to delay that to a period 18 months after the commencement of SMW, so that we could have regard to what impact the SMW figures had had on the changes of wage distribution, so we could factor that into the review. And of course, a necessary part of that review is the relationship between minimum relevant income and statutory minimum wage. We have commenced that review. Our intentions in that respect are to consult broadly on this in mid this year, and thereafter get our recommendations to the government. As this will require amendment to the legislation for the mechanism, not just the ultimate figures, this would suggest that any adjustment following that review and change to the mechanism will not occur until after 2014. Consequently, having regard to the changes in statutory minimum wage, we considered it appropriate to undertake an interim review outside the normal 4-yearly cycle, particularly having regard to the changes in the statutory minimum wage level. As members would be aware, the new SMW rate of $30 was approved by LegCo with effect from 1 May this year, and so we have reviewed the minima and maxima relevant income in that context. Looking to that review and the recommendations that flow out of it, firstly in relation to the monthly minima relevant income, if we look again to the statutory factor, that is 50% of the median, that suggests the figure on that basis will be $6,000, which of course is lower than the current figure of $6,500, so is not considered appropriate. If we look to the methodology that was applied in translating this to the SMW figure in 2010, then if we do the maths on that and making some small adjustment for the change in median daily working hours of low-paying sectors, which is now 9 rather than the 8.5, although there's various ways of looking at that data, if we applied the same sort of formula, then we would come to a figure of about $7,020. And the proposal is that this could be rounded up to $7,100. And as the paper suggests, the authority has come to this view having regard to the levels of take-home pay and the ability of these lower paid sectors to, in effect, defer their current consumption in the interest of future retirement savings. We've also had regard to the administrative work and costs of the industry and employers, because if the adjustment has suggested only a tiny change, that might not be appropriate to make, but the actual maths suggests that the change is not a tiny one, but is substantive, up to $7,020. Looking to the figures for the monthly levels of relevant income, if we apply the statutory factor, that is 90% of wage distribution, applying that will be $35,000 at the moment, which is substantially above the current level of $25,000. The recommendations from the authority relate to pursuing the phase 2 adjustment from the previous process, where only the first of those 2 steps to $25,000 was undertaken. The considerations of that are also set out in the paper, but essentially it relates to trying to keep the current level of maximum relevant income somewhere near the statutory factor. The current level of $25,000 is only at the 82nd percentile of wage distribution, whereas the statutory factor suggests a target of 90th percentile of wage distribution. If we wish to maintain that relativity, then it's necessary to make some adjustment to that. There's also a factor which the authority has taken into account, is that rather than make separate adjustments for the purpose of convenience for both employers and administration of the system, there are advantages if adjustments to min and max can be done concurrently, and that is part of the considerations which the authority has taken into account. Consequent to any changes to the minima and maxima levels of relevant income, there would be adjustments made to that would be necessary consequentially to the daily figures for minima and maxima. And these are particularly relevant, of course, for casual employees or other employees remunerated other than on a monthly basis. So the consequential amendments that would flow from that are set out in the paper and on this slide. Reflecting the $7,100, the daily min would be increased to $273, and the proposal is to increase that to $280, and the $30,000 monthly figure would convert to a $1,000 figure daily. And these would be reflected in amendments to schedules which are set out in detail in the paper, and I'll come back to some specific proposals in relation to those shortly. We have, of course, endeavoured to consult with stakeholders in relation to these issues. In particular, the authorities consulted with our own advisory committee, the LAB in January, and also our own industry schemes committee. The issues we asked them to consider were the broad issues about whether in consequence of the issues that I've referred to, whether the minimum relevant income should be increased to $7,020 to reflect the new SMW rate, and if it was generally considered agreeable to increase that, whether that ought to be rounded, and the proposal for consideration was whether that should be rounded to $7,100. And at the same time, we sought advice from those three bodies in relation to pursuing a phase 2 adjustment, that is the increase from $25,000 to $30,000 of the maximum level of relevant income. The views of the parties we consulted are set out at some length in the paper, but in summary it could be summarised this way, that there was widespread support in those three bodies for increasing the minimum level of relevant income in light of the SMW adjustment. There were a diversity of views about how this could be rounded, that is, whether to stay at the 7,020 or round it up to 7,100. And as the paper suggests, there were some members in two of the three bodies that suggested it appropriate to round up to a higher figure of $7,500. In relation to the maximum relevant income, there was, fair to say, general acceptance of increasing max RI to the $30,000, but this is impacted a little by the views on timing of the adjustment, which is where there was some diversity in the views we obtained from those three bodies. There was general acceptance and some insistence on the need to adjust both simultaneously. There was general acceptance of the need to increase minimum relevant income as close as possible to statutory minimum wage adjustment, but there was generally lack of support of adjusting the maximum RI at that same early time. So some enthusiasm for early adjustment of min, but not such enthusiastic support for early adjustment of max. There was, as the note says, there was a general view that the max RI increase could be delayed through that process. At the same time, as I said, there was general acceptance that if it's possible to do so, they should be adjusted at the same time, but there's some conflict in those views as to how to manage the timing of that process. Having considered the factors I've referred to and the comments from those three bodies, the Management Board of the Authority did deliberate on the possibilities and made the following recommendations to the Government, that the minimum level of relevant income could be increased.
Mr. McShank, would you like to speed up?
So please speed up the process. Thank you.
Sure, coming to the end. So the authority recommended to increase the min to $7,100. That is a small rounding up from the mathematical calculation of $7,020. The authority was also of the view that it appropriate to follow through with the Phase 2 amendment to increase maxima from $25,000 to $30,000. And noting the necessity of associated publicity and system changes by employers, it was proposed that a 3-month period be allowed after the passage of relevant legislation for implementation of those changes. So a 3-month time period for both, which should happen simultaneously, was the recommendation of the authority. I won't go through these in detail, Chairman, but annexed to the papers there is the mathematical computation of the impact on this. Most relevantly, I suppose, increasing min from 6,500 to 7,100 would take 53,000 employees and 8,400 self-employed people out of the contribution net. They would not need to make contributions, but for the employees, the employer would need to continue to make that. And Annex D also sets out the maths for the impact on increasing the max from 25,000 to 30,000. As the slide indicates, this would affect some 377,000 people. There are some consequential and issues in relation to the calculation methods for casual employees. I won't go through this in detail, but there are special orders relating to the contribution scales for casual employees in construction and catering industries. This is to deal with the fact that many are either daily paid or daily rated or not paid on a monthly basis, so there's some simplification of that. The current orders, there are 3 scales and 2 contribution methods within those scales. The suggestion had been made to us that these need to be simplified, and we did undertake a process to consult the affected parties, mostly through our industry scheme committee and affected bodies, particularly unions and employers, about simplifying that. They did agree to that with a proposal to simplify those contribution scales in accordance with the principles set out in this slide and set out in the paper. Subsequent to considering this interim review of the levels of minimum and maximum relevant income, the proposals we consulted on in effect became outdated, so we did further consult the Industry Scheme Committee in 2013 to in effect reflect any change in the minimum and maximum relevant incomes in those scale, and those proposals, as set out in the paper, were endorsed by the Industry Scheme Committee in January. So in effect the proposal in relation to those is relatively technical, but is in some sense consequential, or to some extent consequential from any other change, would be to replace the 2 methods under the order at the moment with a single new scale, and if any amendments are made to the minima and maxima relevant income levels out of the current proposals, that these be reflected in those scales going forward. And for completeness, those are set out as set out in the paper in this slide. That's in summary, Mr. Chairman.
邊位議員想
Who would like to ask questions? Tan Ka Piu, just one. And Mrs. Sin Chung Kai. 3 minutes each, Mr. Tan Ka Piu. Sorry, speaker's not coming through. I have to declare I'm a member of one of the committees, and I'm from the labour sector. I respect the views of the LAB on this proposal to adjust upwards the relevant RIs. But I'd like to ask about the MPF system as a whole, because earlier on the MPFA prepared a report with the presumption that if the accumulated funds or assets are larger, the administrative costs would come down. That's the assumption. So having looked at the table, it's expected that 400 million extra will fall into the MPF fund. So will that help in reducing administrative costs since the scale is larger? Who would like to take this question? Who from the administration? Yes, there.
Chairman. In essence, the point made is the correct one, that there are, on the basis of the review that was done last year, the E&Y report that we did publish last year, and previous studies, of course, the cost of providing administrative services is a scale business. So it's necessarily the case that those costs will be lower on a per dollar basis as the system grows, and that's always been one of the submissions the industry made to us. How that's reflected in their fee is a slightly different issue, but to the extent that their costs are lower, then that should create scope for lower fees. And of course there are a broad range of initiatives by the authority and the government in relation to how to ensure that fees are lowered over time.
But have you any forecast? I mean, frankly, for last year, the total expenditures that for every $100 of contribution, $18 would be the administrative cost. So for $400 million, $70 million will be the administrative cost. And now you're saying that the administrative cost has risen by 1.75. So, and that is what we're concerned about. Well, I think what we're talking about is 1.7 instead of $18. Okay, we can talk about this afterwards, but I'm talking about on the whole, the administrative cost. Well, the administrative cost is just 1.7%. I'm talking about 100% contribution per $18, and that is I'm not talking about 1.75% of the total accumulative assets. That's the case, and that is $18 per 100 contribution a month. I don't think you're correct, but we can discuss this after the meeting. Well, anyway, the scale is getting bigger. Will that help in reducing costs?
Thank you, Chairman. In short, yes, the increasing scale should reduce costs. As I said, there's an issue about how that's translated to fees. The current fees, as you've noted, have come down in the last month from 1.75 to 1.72. On a mathematical basis, although, as you said, we can talk about this later, that would mean for each $100 in the system over the year, that would represent costs of $1.72 at the fund expense level. We would certainly hope that, yes, increasing scale does provide the opportunity for costs to be lowered, and that's confirmed in the report that was issued last year. And we need to work, with the government and the legislature on ensuring there are mechanisms to ensure that any cost reduction on a percentage basis does actually translate into fee reductions over time.
Mr. Sin Chung Kai. I want to ask a simple question. Now, after you go through all the consultation and the legislative work, when will you table the relevant amendment to the LegCo for voting? I'm not just talking about voting, but perhaps first or second reading. Chairman, let me take this question. But depending on whether there is a mainstream view or majority view formed in this panel, if there is a majority view, is quicker for the administration to come up with a legislative proposal. We anticipate that we'll be able to submit the relevant legislative amendments in May this year. And this is a subsidiary legislation. So it won't be done in the way of first or second reading, but it's a positive vetting procedure. So it will be done by resolution, yes. So when does the administration expect this to come into effect? Let's say if we do not oppose the amendment today, then after passing the resolution, when do you expect this to come into effect? If the MPFA's recommendation can be endorsed, I mean, after it's passed in the LegCo, publicity will have to be done, informing employers and employees of the new arrangement, and some adjustment will have to be made in the system. And the MPFA's recommendation is that 3 months should be allowed after the legislation is passed for this to come into effect. And in the beginning of the presentation, it said that after the resolution is passed, is it the case that there won't be another review in the coming 4 years? Well, we are at the beginning of our term. So I think within the 4 years, you should at least come to the electrical again. So because you're making this adjustment according to the review of the SMW rate, which is subject to a 2-year review cycle. And there are aspirations within this council that it should be done on an annual basis. So I don't know the interaction between the SMW and the MPF scheme. Let's say if this takes effect in 2013, what or when will be the next review? And let's say if the SMW takes place, or a review of the SMW takes place 2 years later in 2015 on the 1st of May then of 2015. So I mean, I had the impression that a review of the MPF scheme would be done once every 4 years. That's my impression. But policy-wise, will there be any adjustment with the administration? Is this a case that after each adjustment to the SMW rate will come again? Ms. Wong? Well, last time in 2010 when MPFA conducted a review, there were views from members that in relation to the SMW implementation, reference should be made to that, and the existing statutory requirements that we need to consider the median income earnings, and also a review should be done at least once in every 4 years. And these are the requirements to be observed. We have undertaken to observe these requirements, and the MPFA will, in due course, submit to the administration the recommendations for amendment, and consultation will also be done. So depending on the progress, if things go smooth, after 2014, a new mechanism will come into place to tie in with that. Mr. Kwok Wai-king. Thank you, Chairman. Now, reading from the paper, well, let me say this first. We support this adjustment because it ties in with the change in the society in relation to the SMW adjustment. Now, according to the paper, some 60,000 people will be exempted from MPF contribution because the level will be raised from 6,500 to 7,100, and there are some 53,000 employees and 8,400 self-employed persons. So some 62,000 people will be exempted from MPF contribution. And it's a matter of hedging. And that is to say, these people may be income earners and there may not be any money left in their accounts. And once the funds from the employers are hedged, there won't be any money left to them. So, according to the Chief Executive's policy address, the hedging mechanism should be gradually phased out. Will that take place? Ms. Wong, would you like to take that question? Now, we take a 3-pillar approach in relation to the retirement protection in Hong Kong. So apart from MPF, we also have other social security measures. Now, as for the offsetting or hedging arrangements, well, I think in this council we discussed this matter before about this offset requirement or arrangement that already existed before the implementation of MPF. And before the MPF legislation was passed, there were factors to be considered, and that's why this mechanism was kept. And recently, there has been a discussion in the Council reflecting the diverse opposite views of employers and employees. So we see that at this moment, no consensus will be reached shortly, so we should focus our effort on dealing with the concern of the community, that is the fees and charges of the MPF schemes.
積金局咧嘅目標咧就唔係強積金咧就係要解決嗰個退休保障嘅問題。咁啊，政府咧而家呢一刻咧都未接受工聯會嘅意見咧，就成立呢個退休保障嘅制度啦。咁但係呢個對沖機制咧係直接 令到個退休保障更加崩潰啊，可以話完全崩潰。希望咧局方咧能夠喺呢一方面咧加大力度，因為咧我哋先後咧都同胡主席咧都傾過，其實佢都大家有個意見交流咧，喺技術上咧取消咗對沖咧，亦都方便嚟緊嘅自由行嘅。
OK， 政府有冇回覆？
我諗冇特別補充啦，不過聽到議員嘅意見嚇。
OK。
I think we have already heard members. Any other questions? If not, this is the end of the discussion on this item. I'd like to thank the administration and MPFA representatives. Thank you. I'd like to ask members whether you would support the submission of the proposal to LegCo. Yes? Thank you very much. AOB, Mr. Kwok, you'd like to say something? Yes, Chairman. This morning I wrote a letter to the Chairman about the sale of units in Epic's Horizon. I explained in that letter that I had already looked at Section 103 of the SFC Ordinance or SFO, and especially about collected investment. We're of the view that actually the sale of units in Epic's Horizon may constitute collected investment. I have been at the development panel last week when there was a discussion on Epic's Horizon, but as far as I know, the SFC did not send anybody to the meeting, and it seems no members raised the legal issues under the SFO. In view of this, I have written this letter so that we can discuss that item here, because if it is about powers of the SFC under the SFO, then it will be within the work and jurisdiction of this panel. And also today, I have discussed this with the chairman, and the chairman proposed, and I had already done it, and that is to write to the chairman of the SFC to see whether I can first of all seek a written answer from them, and also to see how he proposes to follow up the matter, and also whether indeed the SFO will cover the sale of units as in Epic's Horizon. Chairman, I hope this will be placed on the agenda, but at the same time, I will wait for a written reply from the SFC. Okay, let us wait for a reply from the SFC first. And if it says it is within their jurisdiction, then perhaps we can place it on our agenda. We'll wait for that letter, and then we'll discuss with the chairman and inform you accordingly. Thank you. If there is nothing under AOB, the meeting is adjourned here. Thank you.